there are a lot of patterns in charting, these types of, analytical science that's used to determine where the price is going to go. I'd like to show you a graph, and this graph is from the time period of 1954 to 2009, 1954 being over here, and 2009 being over here. So, and what are we looking at? Well, across the bottom, the blue is the federal funds rate. This is a rate set by banks. They decide what this is going to be, independent of anyone, except their other, working friends. So you'd have to actually know them to, get this information ahead of time. But hey, if you're in the banks, you might be able to. So if we look at the graph and we follow it across, there's a couple things that are always true. And the one thing that's always been true is that if the silver price goes up, the Feds will raise interest rates to bring the silver price down. And if the Feds lower interest rates, the immediate effect is the silver price goes up. Now, the Feds in this chart have never, and actually all the way back to 1913, they've never had the interest rates this low with this much money in the system gaining interest. So all those dollars that are out there, that big M3 number, all the currency that you can imagine, digital and otherwise, is gaining interest. And because it's growing exponentially, the interest is also growing exponentially. And at some point, all of these dollars are going to have to find their way into real goods. Think about that for a moment. So if all this money is going to go into real goods, then anything that is a real good and tangible that you can buy and hold is going to start costing more. We're going to have inflation. There are a lot of deflationists out there. This is going to go down. No. Okay, for deflation to actually take place, the Federal Reserve must raise interest rates. Okay? And their balance sheet right now holds quite a few assets, whereby as the interest rate comes up, those assets go down in value. So if the Federal Reserve were to jack rates up right now, they'd effectively bankrupt themselves, at least on paper. So we have to really take a look and make a decision as to, if this was a pattern that happened in the past, and it may happen in the future. Seeing as how when interest rates are dropped, we don't know what happens at zero, right? I mean, if you know who to call right now, you can get some free money. That would be nice, wouldn't it? Well, that's kind of what happened in Zimbabwe, isn't it? The leader started paying all of his guys around him a whole bunch of money, people that he knew. And the general population couldn't get a piece of that. So, as that continued, if one man's worth really $100 million a year because he created something, I'd like to see exactly what he created that was worth $100 million. Anyway, so this pattern is going to repeat itself, in my opinion, and except this time it's probably going to be a lot bigger. The second bird, is usually comes a lot faster after the first one. Usually they're almost simultaneous, but because we're looking back at quite a few years here, I'm going to say that we're probably right now right about at the beginning of the first finger. So if that's the case, looks like the middle finger this time might be pretty big. But again, you can feel assured that all of your dollars are guaranteed, and you're going to have them, and you can buy stuff with them. What you can buy with them, and how much you can buy, well, that's not guaranteed. But you're definitely going to have the pieces of paper. And I know for a fact that the Federal Reserve and the Treasury can give everybody as much paper as they want. Yep, they can even raise the denominations, go back to our $100,000 Woodrow Wilson bills. Anybody remember those? Yeah, $100,000 Woodrow Wilson. What a guy. Started the Federal Reserve, didn't he? Yeah, I think he did. But anyway, so, I'm going to put up my interpretation of the graph, and instead of doing it in paper or digital images, I'm going to do it out of real stuff. And if everybody else would, care to do that as well, I think that right now the Federal Reserve has their pants about down to their ankles, and they can't run. So